Hi, everyone. Today we have Carla Kite with us again. She is one of my preferred lender partners, and we are going to be talking about mortgage assumption. We talked a little bit about that last month when we met, but I wanted her to give us a more kind of an overview of this. Like, what is it? When is it? When is it helpful? What are the implications of it? And everything around that. So, welcome, Carla. It's good to see you.
Thank you, Carol. Good to see you as always.
So tell us a little bit just about, just help us understand what is mortgage assumption? Like, why would someone use that and what does it necessarily mean?
Yep. A mortgage assumption is when you would assume or take responsibility for the loan in its current state. So that means the current interest rate, right, and the
Mhm.
current balance.
Okay.
And while it can be done in some purchase transactions, typically only on VA and FHA, you can assume the loan. But that can be really difficult for people because they need to come up with the difference between what that loan amount is. Because remember, you can only get it in its current state and the
Right.
purchase price, right? So if
Okay.
they're selling the home for 600,000 and the loan is 400,000 and the buyer wants to assume that loan, they've got to come up with a down payment of 200,000.
Mm,
So you don't, I mean, I know that there are some purchases being assumed, but I think for the purpose of what we're talking about today, I think we're talking more along the lines of divorce, right?
right. Yeah. I have seen that though a couple of times now that you mentioned that. I've seen that there's a VA assumable loan, like the interest rate is like 3 point whatever, and
Yeah.
somebody could assume it. But I didn't realize that that was part of it, is if the purchase price is well above what the amount owed is, you're going to have to come up with that cash.
Yeah. The
So,
other issue when you're assuming a VA loan is you're tying up that veteran's VA eligibility. So that's why it's just not a very common thing. Now, if there's another vet that wants to assume that VA loan and they have eligibility, then they will release the current vet's eligibility.
right. Okay.
He or she can use it.
Right.
But otherwise, probably not the best idea.
Okay.
Yeah,
That's very,
even in a divorce.
okay.
If the vet is the one that's vacating the property, they typically want to leave with their VA eligibility. I actually just had a client earlier today in that situation. So,
Mm, okay. Yeah, because explain that to some of our people that don't understand how VA works, that you have like eligibility, you can get like one loan for a house for a purchase at
so
a time.
you can actually do more than one. That's what a lot
Okay.
of people don't know.
Okay.
You typically cannot do more than one at 100% financing, and that's the really big benefit to VA.
Okay.
So, but yeah, it will, VA loans are wonderful loans. They don't have any mortgage insurance, 100% financing, but yeah, it has to be held by the actual veteran
Okay.
that has that eligibility. And so if they allow somebody else to assume it, which they can,
Yeah.
then they're leaving that eligibility with the home, with that person that's assuming the loan until they would maybe refinance. And that would be really risky. You wouldn't want to do that and say, like for example, you can assume the loan and then, but you have to refi in 2 years. Well, what if they can't refi for whatever reason?
Right.
So, you wouldn't want to do that if it's really important to you to keep your VA eligibility.
Yeah. Yeah. Excellent point. Okay. So moving into mortgage assumption when it comes to divorce. What
Yes.
can you tell us about that and why is that important with
Yeah.
somebody that is looking to maybe get another home or even like not refi? Like I said last time, I'm in that situation. I don't want to refi because my interest rate is so good. So
Yes.
talk us through that.
So this is huge, and there's been a lot that has kind of changed over, the last, 2 years that interest rates have been really high. Um, that's when these assumptions kind of started becoming a thing because prior to that, nobody cared. They were like, well, I'll refinance, the rates are in the twos or the threes or whatever. And it was no big deal as long as they could qualify. They would refi and remove the other person from the mortgage. But once rates started really climbing, and then when they climbed as high as they got, I mean, last October of 2023, we were just right over 8%. And
Hmm.
that's a pretty big difference from if you're sitting in a loan at 3%,
Yes,
right?
definitely.
It can significantly impact our divorcing clients. And so um, I think it was probably around this time last year that I realized that there were some servicers that were allowing assumptions even on loans that are deemed not assumable.
Hmm.
So if you have an FHA or a VA loan, those are assumable loans.
Okay.
You can assume those in a divorce and a whatever. But Fannie Mae and Freddie Mac clearly state that their loans are not assumable. It's right on the closing disclosure. This is
Okay.
not an assumable loan. Like the box is checked on every single one of them. But what we found is that there are a lot of servicers that are allowing what's called a release of liability, which is an assumption.
Hmm.
Um, it's just really about asking the right questions because if you're going through a divorce and you call your servicer and you have a Fannie Mae loan and you say, "Is my loan assumable?" They're going to look it up and they're going to say, "No,
No,
it's
yeah.
not," right? Because that box is checked. It is not assumable.
And if
If
that's all I know to ask, then
correct,
yeah, that's all
if
they're
that's
gonna, right.
yeah. So what they need to say is, "I am going through a divorce. I need to know if I can assume this loan from my ex-spouse."
Okay.
Um, and even then, the person that you're talking to might not have, it might take you more than one phone call to get there. I
Okay.
will tell you, there is a bank in northern Colorado that apparently is not allowing assumptions. It's literally the only one I've seen so far.
Okay.
Um, so I don't know if they'll come around and start allowing assumptions. I have two clients right now that are trying to assume their loans and they're being told no.
Hmm.
Um, but like everyone else is allowing it. Cross Country Mortgage, that's who I work for, and we
Yeah.
are allowing it. Wells Fargo, Chase, Bank of America, like all the big boys,
Yeah.
everybody is allowing these assumptions, even on Fannie Mae and Freddie Mac. You just have to ask the right questions.
Okay.
Okay.
So is
So
there anything else other than letting them know? So I'm getting divorced and I need to be able to assume this from my ex-spouse. What else do I
yeah.
need to know?
So that's the first step.
Okay.
Just finding out if it's possible, right? That's
Okay.
the first step. The second step is really understanding if you qualify or not. And I will tell you, as a consumer, this could be really, really tricky if you don't understand what underwriting guidelines are and what
Mhm.
qualifying income really is. Because you've maybe been awarded a sweet settlement in your divorce, and maybe your ex is paying you 20 grand a month, and you think that's plenty, right?
Yeah.
To cover a 2,000 or a $3,000 a month mortgage.
Right.
Yeah, that makes total sense. But I will tell you, if you're not receiving that money for long enough, we won't count it at all. So it's really, really important because when you're doing an assumption,
Hmm.
you're working with the investor and you're literally working with a paper pusher inside there. They have zero knowledge of qualification. They are not there to help you. When you bought your house, you worked with a loan officer, whether it
Right.
was a loan officer from a mortgage broker or a bank or whatever. You had somebody like me that was guiding you through the process and we're helping you. We're so invested in getting you to the closing table because guess what? We don't get paid,
Yeah.
right? So we're
Right.
there. We're coaching you through this. We're
Yep.
helping you. We're making sure that we can clear all the hurdles. But when you're doing an assumption, you're literally sending your paperwork into like a black hole
Mm,
and they take it and they send it off to the underwriter. And then the underwriter takes however long.
okay.
They get back to you and they're like, yes or no, or we need this or that, right?
Okay.
Most consumers have zero idea what it takes to qualify for a mortgage, like zero. I
Mhm.
think as a realtor, you probably have some idea, right? But you're not a lender either,
Right. Yep.
you know? That's the really the second step. You got to find out if it's assumable first, and then you have to figure out if you actually will qualify for that assumption, especially before you agree to that in your settlement.
Right. Yes. That is
There's a lot of
definitely
people that do
key.
that.
Yeah. So let's say I'm trying to figure out if I qualify. Let's talk about some of those things because I know that I've learned in my journey that you have to have, if I'm getting maintenance, it has to be into a separate account and it has to be for a certain period of time. Can you talk about some of those, some of the criteria around that?
Yeah, absolutely. So And this is very general because we have a lot of different ways that we can work this and so on. But generally speaking, you have to have received the maintenance or child support for 3 to 6 months, 3 months for FHA, 6 months for conventional. So for
Okay.
Fannie or Freddie, you have to
Mhm.
have received it for 6 months on time. Okay.
Okay.
Every month, they can't prepay, like give you a bulk payment for 6 months. It has to be
Mm.
paid every single month. It
Okay.
has to be paid from them to you, so it can't be from some old joint account that you guys had into a joint account, anything like that. It has to be from them to you, it has to be clear.
Okay.
Um, and then it has to continue for 3 years past the date of the closing on the loan.
Okay.
Okay. So, what you have to watch out for there is like if we're using child support for, kids, if
Hmm.
the children are over the age of 16,
That's
chances
not going
are
to
we won't
be.
be able to use it,
Yep.
right?
Yep.
So there is a lot of factors that go into this. There are some different things that we can do with trusts. So
Okay.
if you're being awarded a lump sum and you're not getting monthly maintenance,
Right.
but to show some income for you,
Hmm.
there are some things that we can do with trust accounts.
Okay.
A lot of that has to be done during the divorce process because it needs to be written into the agreement properly. So
Okay.
there's some different things we can do there with that. But generally speaking, it's 6 months receipt and 36 months moving forward.
Okay. That's good. That's key information. And everybody can look at that and say, yeah, I'll qualify, or no, they're going to be 18 in 2 weeks or whatever. And
Yeah,
yeah.
that's,
So, and
yeah. And so,
do you
well, if you know
combine?
that though, you
Go ahead.
can extend that.
Mm,
So like if you know that, and let's say you're only getting maintenance for 3 years,
right.
well, take that total sum of the maintenance and you can stretch it out over a longer period of time so that you have time to receive for 6 months, get the refi done or new
Yep.
purchase, and that there's still time. So you can take that same sum and just lower it monthly and extend it out longer so we can actually use it.
But again, that all has to be written into the settlement. So, yeah, which is why it's key that if you are starting to look at divorce or you're considering going through divorce, if you haven't talked to anybody yet, it's key to have somebody like Carla to be giving you some of this information and learning what it is you need to do before. Because I've talked to several other clients too that have gone through the whole process and they didn't have any of this information on the front side. And the settlement is, is approved by the judge and
Yep.
it stands. And so there's not much they can do,
Then you have to go back and try to get a modification done, which is
which
time
is
and money.
mhm.
And
Yes,
not possible because sometimes the ex won't come to the table on that.
right, right. Yeah.
Yeah. Yeah.
So it's a lot. So talk to us a little bit about, I know you've been offering some services like some groups and different things like that. Talk to us about some of that you're offering that people can jump into. I think you've had a couple of Eventbrites that I've seen or
Yeah, so most of my stuff through Eventbrite is strictly for either realtors or attorneys because I do continuing education for both.
okay.
But I do have a couple of webinars that I do, with some other people, like with an attorney and a divorce coach.
Okay.
Um, and I have another one that I'm starting with a mediator. And so we do talk about the services I provide. So I am a lender, but I'm a certified divorce lending professional. I also provide services for divorce mortgage planning strictly. And that would be for the clients that are not going to do a loan, but maybe they are going to do an assumption and they need to make sure that they're setting themselves up properly. Can I tell a
Okay.
quick story about this?
Yeah, go for it.
Okay. This is great. And I'm going to call out this company because I think that they suck with their process and their service. I had a lady that I spoke to in June, and she started her assumption process in November with Megastar Financial.
Okay.
And the biggest thing with them is that they would only communicate via snail mail with her.
Oh my
Isn't that
gosh.
terrible? In this day and
It's
age, and this,
2024, people.
right. And this
Holy
is my
cow.
whole point is that
Yeah,
these,
wow.
these companies are not making it easy to get these assumptions done for two reasons. Like one, they're not equipped. nobody was prepared for what this was going to bring with the high interest rates. Um,
Yep.
so the lenders simply they're not equipped. They don't really know what they're doing. They're doing manual underwrites on this, which is it's just a more it's a stricter underwrite that they're doing for
Okay.
these. So we have to really stay tight within our guidelines to help these people going through assumptions.
Mhm.
But so for her story, so she started the process in November. She had an agreement with her ex. It was fairly amicable, that she would have the loan assumed and have him off of it, I think by like June or July of
Okay.
2024.
Yeah.
So she went back and forth with him a couple of times, and then she was denied in June. That's when she called me. I
Oh my.
literally, in 3 minutes, told her, you don't qualify. But she
Okay.
would have qualified if she was receiving the maintenance that they agreed on. The problem is that when they agreed on this maintenance, they made a little side agreement, which is what a lot of amicable
Hmm.
people do. They made a little side agreement that he wouldn't start paying her the maintenance until a certain time. So I went through some numbers with her and I said, look, if he starts paying you the maintenance, start in July, then
Mm-hmm.
she can now apply for the assumption after she's received it for 6 months. So she
Okay.
can now apply for the assumption in January. And I don't know, maybe Megastar will have it together by then and they won't do this snail mail thing with her and maybe they can get it done quicker.
Yeah.
But based on what she experienced with them, she'll be lucky to have this assumption completed by like July of 2025.
Wow.
Yeah. But what they also didn't know was that because the home was awarded to her, we no longer count that mortgage payment against him. So he can go
Okay.
on and buy. And he thought he had to wait until she assumed the loan for him to go buy. But you
Okay.
don't. Like we won't count after we have that court stamp separation agreement showing the home was awarded to so and so is responsible for the payment. We won't count the payment against the other person.
Okay.
So the assumption process for him is just, as long as he is obligated on that loan in the eyes of that creditor, if
Hmm.
she ever makes a late payment, she will absolutely screw his credit.
Okay.
And that's the real big reason for wanting to get people released of liability and assume the loan.
Right. So address that just real quick too, because I know in my settlement, we've actually written things about if one of us is to miss, because we have two homes, if one of us is to miss, two consecutive payments on one of the houses, that the house will be put up for sale. I mean, are
Mhm.
there other things that you would recommend just as you're writing the settlements to maybe protect you, or if you're not
Yeah.
assuming the loans and stuff?
So let's talk about your deal
Sure.
specifically, your verbiage. So is that all that was stated? Is that if you miss two consecutive payments, like missed by when? Was that addressed? Was there a time frame?
Yes, because it's late after the 15th. So if it's late more than once or more than twice, which is after the 15th of the month, then the house immediately has to go up for
Okay.
sale.
Okay. Which is good because late could mean that
Right.
you paid it on the second,
Yep. Yep.
and that's not
Yeah.
fair.
And I
Um,
think I learned that just from being around you and some other people over the last year or so to make sure that that verbiage was very clear and stated in the
yeah.
settlement.
And in reality, um, even, like I would really watch like if you guys are both on both of the mortgages,
Mhm.
and you are, right,
Yep.
you have access to them.
Right.
What's scary is that, like what if you're not? Like I have a lot of people sitting in the homes and their ex is on the mortgage, they're not on the mortgage, and their ex who left the home never gave them access to the
Yeah.
mortgage. I don't even get that. I don't know who doesn't write something in their separation agreement that protects them, that
Right.
gets them access. It's an easy process to get somebody else access to your mortgage,
Yep.
right? So that's one thing there.
Yep.
But like for you, like you guys can go in and check each other. And
Exactly. Yeah.
sure,
Right.
right? That
Hmm.
it's and so yeah, if you see that happen twice, if it's paid after the 15th, it's not going to hit you late on your credit. There's a late fee that's
Right.
a it doesn't hit your credit until it's 30 days late. So like in October, if it's paid
Okay.
on Halloween, that's a late on your credit.
Okay. Good to know.
Okay.
Yeah.
If it's paid by the 30th, you're still good and they just pay the late fee and you're fine. But
Okay.
there's a big difference between when it hits your credit and when it doesn't,
Doesn't.
right?
Hmm.
But I think everybody should pay their mortgage, by the 15th. If you're going past the 15th, I mean, I don't know if there's like some medical issues or something like that, you guys can maybe readdress some things and, be nice to each other because it's not hurting your credit,
Right. Yeah.
right?
Yeah.
Um, and really the reason that you want to force the sale there is to salvage your credit, So I think there's some things that can be talked about there if it goes there, but I'm glad that you guys were very specific on that because I think a lot of people are not.
Well, I think people don't know. I mean,
Yeah.
seriously. I mean, I've been married 32 years and this all came out of nowhere and kind of slapped me in the face. And
Yep.
I didn't know what I didn't know, yeah. So I was glad that I was able to find people like you and just learn more about the whole process. So
Yeah.
yeah,
And
it's very
see,
important.
Carol, that's the thing. Like you have so much access to so many people, that do this. But think about the normal consumer.
They don't. Yep.
They don't. They don't have access. They don't know who to call. They don't know who to trust. They don't know what questions to ask. That's why these are so good.
Yeah. Yeah. So yeah, and I'm going to share this with all of my group too, just because it's good information to have. And yeah, so anything else that you want to talk about today? I know we've been kind of
Um,
focused on mortgage assumption, but anything
you know,
just in the
yeah.
lending world?
So, staying with assumption really quick, I
Okay.
think it's also really important to understand, does this make sense? Because if you're keeping the marital home and you have a $200,000 mortgage that's at 2.5%, which is super sweet, but
Mm-hmm.
your home is worth $1 million, right? And so you owe your ex 400,000 equity in the home. Do not make decisions based just on the fact that you have an interest rate at 2.5%. Do not
Mm-hmm.
give away the farm. Don't give away all of your retirement, right? Like,
Yeah.
sorry, but it might make sense to actually do a refinance. When you have a low loan balance, it might make more sense to do a refi and pay them out that way. It
Right.
might make more sense to sell the home,
Yeah.
right?
Yeah.
I have talked to several people. I had a girl who went through this and she gave up her entire retirement, which wasn't much. She was in her 40s. She cut hair. She had $140,000 in her retirement so that she could keep the mortgage and assume the loan. She gave him her entire retirement and she agreed to make extra payments to him for 5 years. That current mortgage payment and the extra payment was actually more than if we were to do a refi and just pay him out the equity that he was owed, and she could have kept her retirement because she'll never replenish that.
Yeah. Wow.
She can't. She's like
Yeah.
strapped now.
Yeah.
So, but people got in her head, you've
Yeah.
no matter what, don't lose that mortgage rate. That was like the craziest advice that anybody could have given her. So you've got to look at everything individual. Your divorce is your divorce. It's unique, and you've got
Mm-hmm.
to understand that it might not make sense to do an assumption.
Yes. And the other piece of that, just having been through this recently, is my brain was just like mush and scrambled, and I didn't know. I
Yeah.
didn't know what I knew. I didn't know what I didn't know. So to actually have people that are not invested necessarily in me personally to give you advice on different things like that are huge. And
Yeah.
again, attorneys can be very helpful, but they don't
Attorneys
always
don't know this.
necessarily know. Yeah,
Attorneys
everything.
don't know this.
Yeah.
They don't. And
So,
and if they do know this, trust me, there's no way that they are 100% up on the guidelines. It's
yeah.
it's impossible. This is a full-time job. And all I deal with is divorcing clients day in and day out.
Yep.
So
Great information. Thank you so much, Carla, for sharing, and thanks for being with us again this month. And yeah, we will look forward to seeing you next month as
okay.
well.
Sounds good, Carol.
Okay.
Thank you so much.
Okay. Bye.